Good morning, viewers. This is Kusum Ramachandran from Manjit Singh CPA PC in Falls Church, and here's Mr. Singh.
Hey, good morning, ladies and gentlemen. Finally, it's over. So we've talked about the extensions, we talked about the tax returns. Now, what do we have to look forward in the year 2009? The biggest topic is the stimulus package that was signed into law on February 17, 2009 by President Obama. Kusum, would you like to talk about the first-time home buyer and the choices that are available now?
Sure, it's spring, and spring is the best time to buy houses, I'm told. And there are people, and by the for sale signs, you know that there are a lot of houses available. And unfortunately, because of this current economy, the houses have been sitting on the market for a while. So you will find yourself, the good news is that you will find yourself a good deal. So this is the best time to buy. If you've never been a homeowner before, go for it. Buy your home in 2009 before December, and you will qualify for an $8,000 refundable credit. And you could actually claim that credit on your 2008 tax return. So if you are looking for a house, then you could go ahead and file an extension if you haven't finalized it. Or if you need your refund and are filing the tax return, file it and amend it to claim the credit later. But it's $8,000 whole dollars, and you don't have to pay it back, unlike the other credit which was announced earlier, which was $7,500, and it had to be repaid over 15 years at the rate of $500 a year.
Ladies and gentlemen, $8,000 is a big amount, and Kusum was almost choking on it. Right. Okay. Couple of things that you need to be careful about. First thing, the home that you buy for the $8,000 tax credit in the year 2009, you need to buy between January 1st, 2009 to December 1st. I don't know why they didn't include the month of December in there, but there specifically says December 1st. The form that we are using to claim that $8,000 tax credit is specifically asking for the contract price and the date that you bought
Purchase.
and the address, so that the IRS has the ability to verify the information from the county records.
Correct.
And just don't do it because you want to do it. The other thing which is very critical is the definition of first-time home buyers.
That's right.
What is that definition?
You should not have owned a home in the 3 years prior to purchasing this home. It doesn't have to be that you never owned a home. If you sold a home in 2005 and didn't buy another house till 2009, you're a first-time home buyer. Is that correct?
That's correct. But remember, both husband and wife.
That is correct too. Yes.
If prior to the wedding, the wife had a home, she sold it while you were married, you are no longer first-time home buyer. That is very critical. Please be aware of it.
Also, in this area, this problem is not likely to arise, but in areas where you can still get a place for $60,000, $70,000, then the credit won't be $8,000. It'll be 10% of that price. So your house should be at least $80,000 to qualify for the full credit. Then, as with everything else, there are income phase-out ranges, and once a married couple makes over $150,000, then the credit starts to phase out till at $170,000, is it? It's entirely gone.
It's entirely gone. So, ladies and gentlemen, if you are planning to buy a house between today and the end of the year, and you followed our advice of not filing the return but filing the extension, you are in good shape. You can, and you owe taxes. You are in good shape to try to see if you are qualified for this credit.
Exactly.
And secondly, for those who have already filed income tax return and are getting the opportunity to buy it now, there's no harm. You can claim it as a credit on your 2009 return that will be done in 2010, or go back and amend your 2008 return. And if you need additional information, The IRS website is full of information these days on the stimulus plan. Until next week, this is Manjit.
And I'm Kusum. Goodbye.
And we'll see you in the future.